My name is Nick B, and let's get into this week's futures overview. Starting with the Forex economic calendar. Monday, we don't have much on the agenda. Tuesday, nothing going on really. Wednesday, flash manufacturing PMI at 9:45 a.m. That's going to be red label. Thursday, we have advanced GDP and unemployment claims at 8:30 a.m. And then Friday, core PCE price index. Okay, so it's not going to be too active of a week, but we have a few catalysts to look forward to. With that said, let's start going over the futures. All right, starting with the S, let's go on up on the 1 year daily, 2 year dailies better. Okay, 4808. This was 2021's all-time highs, and all right. Well, we had quite the pullback. Totally wrong last week about going long and trying to buy up the dip. I mean, I was anticipating maybe a 5%, pullback, but we got a little bit more out of that. And we're faced with a close either or scenario because sure, this was a nice cool off, but is it about to be a grind higher or are we about to break down? And price action, as always, let's map out the floors that we're in between. So 54.90 and 57.21 are the floor that we're in between. Until either or breaks, we're not really gonna get directional trend. That I understand here. Um, Everything I try to do in between the 20-day EMA and the 50-day EMA, I can't help but think that I'm just guessing, and I'm not going to be doing that. Let's take a closer look on the 4 hour, but at the moment, all I could say is either below 54.90, close to the 50-day EMA on the daily, and that's really going to expose us possibly down to 5400, but then 5340. But I'm really taking aim at 5200, 5207, roughly in that area first. At the same time, I do want to point out that ES is actually holding up just a bit better than NQ. NQ in correlation with ES, it's actually below its support, way below its support, but ES is still managing to hold that floor of 54.90. We'll take a look at NQ in a second. I think we're actually bouncing off of it into this open. With that said, on the 4 hour, I could break this down, and there's a few things I see. A, this is the floor that we're in. We're breaking below the first higher low here intraday, but we're also making lower lows, lower high, lower low, lower high, and then we're propping up against the 200-day EMA, which is at 55.40. A break below 55.40, the assumption is we might be revisiting the floor of 54.90, 5500, but I won't hold my breath for that yet. With that said, for me, a clear green light that okay, it's about to gain some strength that we can continue higher is get me above the second lower high of 5660, and that's going to give us room to come up to 5680, 5700, ultimately aiming at 5721. Get a break above that, we're going higher. But again, let's talk a little bit more about the downside. If we do end up breaking down below, ultimately, I would say 55.20. That's kind of the last standing line support in this upper side of where price action is hanging out. 55.20 breaks, you can already see that 5500, 54.90 are going to be very realistic targets. A break below 54.90 seals the deal, and we're probably going to be heading towards the previous higher low of 5400. So that's a nice 80, 90 point move down on ES if you get that break of 54.90. Ideally, wait for the 1 hour candle to close below it, and as long as we can sustain there, we'll probably end up going lower. All of last week's Friday's environment, most of last week's environment was about shorting the rips. Any rip to the upside, any rip to the MAs, especially on the 4 hour, the 20-day, we were just rejecting off of it. Um, with that said, I could. I just want to try this out, see if it gives me any information. I could take a fib from the low point of 54.90 into the high point of 57.21. Let me just change this around so that it could stand out to me. I care about three levels. All right, 61.8, which is at 55.78, the 50%, which is at 56.06, and 38.2. if we can successfully get above 55.78 on the 1 hour. But then again, that's intraday trading stuff. I mean, you're still in a sense going to be timing whether it's a breakout or not, because only from what I understand here, only 56.60 and the fib perfectly lines up to this area of 23.6. 56.60, get us above that on a yes. Okay, we can exhale and talk about being a little more confident going long. Of course, what about all the points we might be missing here at the bottom? We're going to have to sacrifice that, I'll be honest, if we want, a little bit of consistency out of this channel, because the last thing I want to do is make my attempts here. Sure, it could be very rewarding that we do end up heading higher, but um, it's 50-50. It's the same kind of scenario here to the downside. I was taking a look at the VIX last week. It was a little bit weird that, we had a bit of a spike to 17-19. We're hanging out in this area. Now, if into this week I can't see the VIX chilling out below 15, at the minimum, get back below 15, maybe the environment of shorting rips may still be lingering in the air, and we go from there. But I won't hold it to it. I just have to pay attention to kind of where price action is in the moment. And this is not very enticing territory at all. I can leave this 4 hour fib here as well. And again, it'll help me guide my way back up 55.78, 5600, 5630. But at the same time, I do understand that your risk to reward ratio here on the kind of setups that you may be taking on, definitely not worth it. Whereas in 5660, I would probably go long there, risk maybe 20, 25 points to the downside, and then I have a nice 40 points to the upside. 50 even if I'm targeting 57.20 to the upside. That's a setup I can get behind. Or get me below 54.90. I know it's going to be a breakdown. I know there's going to be no sustainability there, and we have all that room to come down towards 5400. With a proper solid stop loss, you could put 10, 20 points and then ride momentum down. Here, this is about to get dicey. Um, Let me remove the fib for now. Let me see on the 1 hour. Let's see if I can kind of trace out anything here. Nope, same thing. Lower low, lower high, lower low, lower high. Get me above the second lower high. That confirms the trend reversal out of there. And then again, if this continues to spill over, I mean, the first sign is going to be a breakdown of 55.20. Get me below 55.20. That's going to expose me to 5500, 54.90. 54.90 breaks, we're shorting. That's with ES. NQ now. Now, NQ does not really want to play fair. That's okay. We can adjust. So, nothing's really changed from the big picture. It's still bullish. We're still making higher highs. We're still making higher lows. But now, when we made the higher highs of 20,983, where is this higher low going to settle? As of now, it was trying to break below the first floor here of 19,722, and we had a close last week above it. Okay, we had a limit open up here just now into market open, and we're holding above, again, 19,722. I'm not a fan that we're below the 20-day EMA on the daily, and we're kind of wedged now above the 50-day, which has 19 at 19,600. Ideally, that was a pretty decent target to target, especially when we broke below the floor of 19,722, but it's not sustaining below it. So what do we do now? Well, I can only identify 20,983, oops, as the high, and if and when that breaks out, we're going to 20,000, 21,250, 21,500. That's still in the tank. But at the same time, I'm going to mark off this floor here of 19,644 that we made on Friday. That was the absolute lows. Now, if I do see 19,644 breaking down into tomorrow, cool. We're coming down to 19,600, and then again, an hourly close below 19,600 is going to give us room to 19.5. Where it gets shaky is if we slice right through 19.5, we're going to be exposed right towards the 100-day EMA, and it's at 18,902. Exactly a 10% correction from 20,983 would land us into the area of 18,880, 18,900. So it's perfect that the 100-day EMA is there to assume that if we do get more downside, it just makes sense. We're going to slice the 50, we're going to head towards the 100-day, and the 100-day also lines up very close to our higher low in this area of 18,950. It all goes hand in hand in this area. So right away, the setup I see is if we're not quick enough to go for a breakdown of 19,600 to the downside, I think a fair break of 19,500 is going to be the last entry shorts can enter before we get a nice move down to 19,000. Again, given that the 1 hour candle holds and sustains us below that area. Now, if we begin to bounce, what are we looking for? Ideally, it would be nice if on the daily we can now reclaim the 20-day, and that's going to be at 20,100. It's a bit of ways away, so we'll have to narrow this down to the 4 hour now, and let's take a look at what is going on here. Okay, lower low, lower high, lower low, lower high, lower low, lower high, and now we're making another low. Okay, cool. So this underlines to us what is going to happen based on which price point breaks down or breaks out. Right away, the first lower high I see is 20,000. The second lower high I see is 20,170. And we slightly brushed up on this last week. If we can get above the second lower high of 20,170, or ideally get an entry in at 20,200, a stop at 170 or 160 area, we have a lot of room to come back up to the upside. We're going to be targeting 20,300, 350, which were the previous all-time highs. Get above 350, we're going to be looking at 400, 450, 500, 600. Your next real lower high really begins around 20,600 to 20,700. The next fight, really, if and when we get into the upper areas, is going to be from 20,500, I want to say, to 20,800. Until 20,005 or 8 breaks out or breaks down, that's what we'll know. That's when we'll know where we're going to go. But for now, kind of seems the obvious answer is if we rip back up towards the lower high and we can see that we cannot break above it, we cannot sustain support at 20,000, we should be shorting this back down towards the supports of 19.7, 19.6, and then again, a break of these lows here, I mean, I really see no floor until 19.5. I mean, that's your next higher low. 19.5 is that clear way that if and when that level breaks, I mean, we're just going to flush. We're just going to come back down straight towards 19,250. And again, this could be, a continuation of that 10% correction, but I don't know. I still kind of don't accept that until I guess I see the breakdowns. When I see the breakdowns, cool, fine. I'll ride along. But for now, the best thing I can do is, at least in my case, is sit tight. I really don't want to overextend here. I would be lying if I told you, oh yes, I know we're going to bounce out of here. I'd be lying, because we have no confirmation of that yet. It's just an assumption. Now, the risk would be fairly petty and the reward would be very handsome. And that's the key attraction factor on the day-to-day trading that kind of, falls into my lap. But is it worth it? Sure, we're risking a little bit here for a lot there, but knowing the environment and seasonality, is it worth it for me to hammer away at attempts? No, no. The fair answer is no. Because I want a little more certainty on my side. And again, I don't feel this here. I think it's very messy. I see it as a very messy chart now, especially if you weren't able to capitalize on shorting the rips to the downside as I last week. But that's okay. We can wait this out and see again. We have our confirmations in place. For me, again, 20,160. I'll definitely be getting ready to go long. It might inspire me to go long if we can hold above 20,000 on NQ, but I won't hold my breath for it because let's go back to the risk to reward ratio of it. If I'm going long at 20,000, where am I putting my stop? Your next nearest fairest support is at 19,720 realistically. or 19,700. You can try 19,800, but we've seen how the intraday moves can swing 100 points up, 100 points down. Why? Well, no one really has a direct answer other than shits and giggles creating liquidity. So, with that said, I want to be a little more sure on what it is that I'm doing. You know, this July's been a little bit rocky. I just was a little bit on the wrong side of the trade, but at the same time, I know that this is about to develop, and we have about a month to see if this is about to be an excruciating 1,000 point grind to the upside, or if we can get the correction over with quickly. If they can rip the band-aid off, break us below the supports, we get that downside. It draws in investors because now prices seem attractive and are cheap, and we climb back up. That's just the way it goes. Uh, to break this down on the 1 hour, again, I can, but let's see. Oops. I can, but again, it's not going to tell me anything that the higher time frames have already not told me. I can assume that I could take a Fibonacci retracement here from the highs, trace it down to the lows on Friday, and then it gives me my 23.6, my 38.2. Huh, interesting. Okay. Well, this kind of reinforces the idea of upside for me, a little more so than ES. And the reason for that is my 38.2 starts at 20,160. It traces us up to 20,318, the 50%, and then up to 61.8, which is 20,476. If we can narrow down, execute, and identify that dips are being bought intraday, we can have a very nice ride to the upside with fair risk. But again, until 20,160 gives, I mean, I wouldn't go for this. I wouldn't touch it, especially with the few catalysts that we have coming up. Monday, I'm not expecting too much. It's going to be interesting. Tuesday's going to unravel the feeling for what we'll have into the rest of the week, and Wednesday, when the news comes out, we'll go from there. But I like this Fibonacci retracement a lot better than I saw on ES. This is a little simpler for me to follow along because again, it clearly underlines the second lower high of 20,160, and I think we've identified our entry point for upside here on NQ. Again, it could be worthwhile to go long here, but I would not expect any continuation in this range. If we are to attempt a 20,000 long, or if we are to attempt a short, we got to break below the support levels of 19,644, the lows of Friday, and for a scalp attempt, again, I'll always revert back to questioning myself: what are you doing? Is it worth it? Is there a continuation, or are we chopping? And we'll see as the day goes on what kind of unfolds. The VIX, that's the outlier for the week for me because again, I think it was a little bit odd that we had quite a nice push towards the upside since last week. So we are a bit elevated here. Get us below 15, we could maybe calm down. Maybe this was good. Maybe this was healthy for us. But again, if the VIX decides to prop itself up and continue higher, and we begin seeing levels of 18, 19, 20, that perfectly aligns as well to that 10% correction off equity highs, ES and NQ, and we can go from there. Um, with that said, last but not least, let's take a look at Russell. Because Russell had that rotation, they were finally moving. Okay, let me start from scratch. Clear this up. Okay, we can see for the last year or so, Russell did not do anything, and for the last 6 months, we were moving sideways until finally we had a beautiful breakout. Now, while ES and NQ are way above their 2021 all-time highs, we're roughly, what, 260 points? Yeah, we're about 260 points below the Russell's all-time highs. Cool. Right away, I gotta fib this. But before I fib it, actually, let's talk about the lower highs and the lower lows, because that is the ideal, that is the prime guidance system for me. So I've identified my highs at 2460. The assumption is if and when price breaks above 2460, we'll see 2500, and use round numbers to identify, our targets higher. But with that said, that's the absolute floor. We could not go higher. Began making lower lows, lower high, lower low, lower high, lower low, lower high, and then sideways for about a year. Cool. We got above the first lower high. We got above, not even, well, yeah, this is the first lower high. We got above the second lower high, which was just recently, roughly around 2137, 2140 is the level. We made session highs this year of 2170. So after we broke above 2140, got to 2170, got above that, and totally took off, soared straight to the next lower high at 2290. We can see clearly that we weren't able to sustain or hold above 2290. Back down we go. I think it's perfectly natural. It gives us enough time, and I think it would be wonderful if when we did break out of 2140 and 2170, it would be wonderful to see a retest of this breakout. Give us a nice retest, give us a nice bounce, and then 2290 breaks. We already know kind of what's scripted in the playbook. Get above 2290. We're looking at really 2460 in terms of upside, but we'll narrow this down right now. And the fib does a wonderful job breaking it down. We start from the highs right down to the all-time lows, and it gives us our levels to the T. To the T. Broke above lower high one, lower high number two, and then lower high number three, got to it, rejected it, and now we're coming down towards support. Now, are we going to hold our 20-day EMA or the breakout area of 2147, 2150? Let's see. There's no rush because at the end of the day, if on the daily we end up closing, breaking below 2147, or especially the daily candle closes below our 20-day of 2142, well, it's good night, Russell. We're probably gonna head back down a little bit lower, but we'll see. I think it's still a small caps summer. And again, 2285, 2290 comes along. That's a low risk I can take on there comfortably with confidence, knowing that we're sustainable to the upside and we're now making higher highs and higher lows. We retested the trend reversal breakout. Now I feel comfortable. Now I feel confident that I can go along here, risk a few points, and I have all that upside to trail on the Russell to the all-time highs. With that said, that is all she wrote. I hope you have a solid trading week ahead, and we'll catch you on the next one.